Shri Gurubhyo Namaha, children. In the last class, we saw what is equity shares, and we saw the process of equity shares, issuing of equity shares, and we saw how the shares can be issued for cash in installments, and how shares can be issued for cash in lump sum and for consideration other than cash. Okay. Now, equity shares can be issued for cash at par or at premium. When company issues shares at a price equal to the face value, that is the nominal value, it is called as issue at par. When a company issues shares at a price more than the face value, it is said to be issuing at premium. Okay. Now, for example, if the face value of the share is rupees 10, you give it for plus 2. You give it for premium, then it is 10 plus 2, right? It is 12 rupees. So the value is 12 rupees. That means you're issuing for premium more than the face value. This is the face value, right? Now, let us get into the accounting part. When shares are issued for cash at par, you have to pass some journal entries. What are the journal entries you have to pass? Now that you're going to apply for shares, when you apply for shares, you deposit some money, right? And then they will allot you the shares. Then after they allot the shares, they will call for the first call. The first installment, okay? First call, then second call, then final call to collect that entire 10 rupees or 12 rupees or whatever the face value is, right? So now let us go into the journal entry. You have to be very familiar with all these journal entries. The first journal entry is on receipt of application money. What the journal entry you pass? Bank account data to equity share application. Bank account data, because bank is a receiver, you're going to deposit money in the bank. Okay, so debit the receiver. Bank account data to equity share application. The second journal entry is on allotment of shares to transfer application to share capital. So share application account data to share capital. This is the money due actually. Then on refund of application money for rejected applications. Now you have applied for shares. Okay, 50,000 shares you have applied for. It doesn't mean the company is going to issue all the 50,000 shares. They may issue around 20 shares, 20,000 shares according to because many people would have applied. So they would have issued only 20,000 shares. So balance share money they are going to return to you. Then what's the journal entry? The company has to pass. Okay. Then next is allotment. When the allotment is due, what's the journal entry? Allotment amount data to share capital. If it is preference shares, they will write preference here. Okay. If it is equity shares, they will write equity. So preference share capital, equity share capital. Then on receipt of the allotment money, you have to pass the bank account data to equity share allotment account. Then becomes the call. Equity share call account data to equity share capital. Then bank account data to share call. This is on receipt of your call money. So it can be first call, then it can be your second call, then it can be your final or third call. So according to the number of calls. Right. Now let us get into illustration 1. We'll solve this problem. Okay. Then you'll get a clear idea as to how to pass a journal. You are already familiar with journal entries, ledger, trial balance, balance sheet. You already learned everything in your 11th standard. Right. Now let us get into this first problem. Illustration 1. Thai Limited issued 1 lakh equity shares of rupees 10, payable 5 on application, 2 on allotment, 2 on first call, and 1 on final call. So what's the total amount? 10 rupees you're getting. So they're going to issue, shares are going to be issued on installment. The 10 rupees, they're not going to take it on application itself. They're going to take it in 4 installments. Fine. Now I'll show you how to pass journal entries for this illustration. Okay. So all the shares were subscribed and the amount was duly received. Pass journal entries. So I'll show you how to pass the journal entry. Fine. Now see, 1 lakh equity shares. The company is going to issue 1 lakh equity shares for rupees 10. Payable 2 on application. So let us have some working notes here. We'll have some working notes here. Okay. 1 lakh equity shares for rupees 10. Okay. That is 5 on application, 2 on allotment, 2 on first call, and then 1 on final call. So total is 10 rupees. Okay. This is the number of shares. This is the value of each shares. So total amount is what? 10 lakhs. Okay. How the company is going to receive this 10 lakhs from you? Fine. Now let us pass the journal entries. So in the books of whom? In the books of Thai Limited. So in the books of Thai Limited, so what is going to be a first journal? Bank account data to equity share application. E means equity, okay? Share application account. So what is the total number of shares? 1 lakh shares into what are you going to get for application? Only 5 rupees, okay? So you can write here rupees. So you're going to get 5 lakhs on application. Okay, you have deposited this much money in the bank. So money received on application. Okay, what will be the second journal entry? Second journal entry, share application account data, equity share application account data to share capital account. That is equity share capital account. So the same 5 lakhs. Okay. Now share allotment account data to equity share capital account. So equity application. Now, so what are you going to receive in allotment? The company is going to call for 1 lakh is your issued capital into 2. That is 2 lakhs the company will get. The company is going to call for in allotment 2 rupees. Okay, you're going to pay 2 rupees. What is going to be narration? The narration, that is your share allotment amount due. Fine. Next, your third entry. What is the third entry? Bank account. Whatever amount is due on allotment is going to be received by the company. So share equity share allotment. Okay, being allotment money received. So how much is that? 2 lakhs. Okay, the company called for 2 lakhs and you have paid 2 lakhs. They have received it. And then you have what? First call. How much is the first call? Now let's see how much is the first call due. Okay. So first call, equity, shares, first call, account data to share capital, equity share capital. So what's the journal, I think narration for this? Being first call, amount due. Fine. How much is due? Again, it is 2 rupees, isn't it? So 1 lakh into 2. So that is 2 lakhs again. Lakhs. Okay. Now this amount, this much money is due. Okay, they called for the first call and then you're going to pay for it. Alright. Now here bank account data to equity share first call, being call money, first call money received. How much it is? 2 lakhs. Then you have the final call. How much are you going to receive in the final call? So how much are you going to receive in the final call? So equity shares final call to share capital. Equity share capital being final call amount due. So how much is due? 1 lakh into 1 rupee. So that is 1 lakh. Okay, 1 lakh. So you have received all the 1 lakh here. So whatever the company has called for, you are going to deposit in the bank. So the company has received it. So equity shares final call being final call amount received. Right? So 1 lakh. Right? So now you have now you have received all the 10 lakhs. Right? In installment you have received it. So see here 5 lakhs. 5 lakhs on application. Okay. And then you got 2 lakhs in your allotment, and then 2 lakhs on your first call, and then 2 lakhs in your final call. Fine. I hope you have understood this problem. Now we'll go to exercise problem. Okay.